Hello, Business 330 students. This is Professor Hassey. It's week 2 introduction video for our second week of our spring session, February 9th through the 15th, with our remote class being Wednesday evening at 5:30. This week, our topic is what happened? Financial statements. One of the things that you learned when you took accounting was the goal of every accountant is to provide external information to the public. And that is in the course of financial statements, the income statement, the balance sheet, and the statement of cash flow. We will talk about those statements this week in class, leading up to our first assignment in our class on chapters 1 through 4, which will be due Tuesday, February 15th. We'll talk more about the assignment in our class on Wednesday. But today it's an introduction to financial statements. Let's look at a quick video refreshing ourselves with these statements.
We are going to discuss 3 common financial statements: the income statement, the balance sheet, and the cash flow statement. Are you familiar with these documents and why they matter to you? If you own your own business or even run a division of a business, it is imperative that you understand these statements because they tell you about the general financial health of the company. Also, if you have ever invested or considered investing in a company, whether through the purchase of stock or through a loan, you'll want to understand the company's financial health. In this program, we will explain each of these 3 statements and what their purpose is, how to read them, and how they can be applied in a real-world setting. So why is it important to understand all 3 financial statements? Basically, each one tells only part of the story. They are somewhat like pieces of a puzzle, and you need all 3 pieces to see the big picture. Let's begin by reviewing the general purpose of each financial statement and what distinguishes one statement from another. Simply put, the income statement tells you whether or not the company is profitable during a given period, usually monthly, quarterly, or annually. It may be helpful to think of an income statement in terms of a video camera. At the start of a period being measured, you hit the record button and the camera starts recording everything that takes place until you press stop. Similarly, an income statement indicates how a company is performing over an extended period of time. Knowing whether your company was profitable over a period of time does not necessarily tell you how much money the company has right now. That's what the balance sheet is for. In contrast to the income statement that records transactions in time like a video camera, the balance sheet is like a still camera, showing the company's financial state at a given moment. It provides a snapshot in time that can be used to determine how much the company currently has, how much it owes, and what is left for the owners. The cash flow statement is based on numbers from your income statement and balance sheet, and is like looking at your own checking account. It shows you what the company did to generate cash and how it used cash during a given period of time, often monthly, quarterly, or annually, like the income statement. Thus it answers 2 questions. Where is my cash coming from, and where is my cash going? Remember, while each statement has a different purpose, all 3 are necessary in helping us understand a company's complete financial story. For example, if you want to know whether or not a company is profitable, the income statement is what you need. Even though you know the company is profitable, if you want to know how much money the company has available right now that you can spend, you want to look at the balance sheet. And regardless of profitability and current available cash, if you want to know where cash came from and where it went, you look at the cash flow statement. Each document fills in a piece of the puzzle to complete your understanding.
Okay, there's a very quick but concise definition of the 3 financial statements that are talked about in chapters 3 and 4 of your textbook. We are to be familiar with that. Matter of fact, in class on Wednesday evening, if you go to week 2 file folder, you'll see an in-class notes section, and there's a spreadsheet of some sample financial statements that we're going to be reviewing in our class on Wednesday. So if you might want to download that spreadsheet and take a look at it, it's the Reggie Dunlop Company, and we're going to be doing some work in defining financial statement and financial statement analysis on Wednesday. This will lead us into one question you'll have on the assignment, where I'm going to ask you to pick one company in your portfolio that you've designed this spring and pick that one company, and you're going to be doing some financial review of that company in assignment number 1. Here is that Reggie Dunlop Incorporated financial statement. It's included in the in-class notes that we'll review on Wednesday. It gives the balance sheet of the company, gives the income statement of the company, and it gives the cash flow statement of the company. We are going to define these and also look at some analytical work in regards to these 6 key components of Chapter 4: current ratio, debt ratio, profit margin on sales, return on total assets, price earnings ratio, and earnings per share. Make sure you might want to review those prior to class on Wednesday. So as one last review of the first week of work, we're going to look at chapters 1 and 2, problems 3 and 6, and 1, 7, and 8 at the beginning of our class on Wednesday, just as one final review of the first week introduction to finance. Then we're going to look at the chapter 3 and 4 accounting financial statements and measuring corporate performance. We're going to look at the Reggie Dunlop Company as an example of that. All these lead into our first assignment, which will be posted Wednesday prior to class. Thanks, everybody. We'll look forward to seeing you on Wednesday. Again, I have reviewed your portfolios and your biographies. Please note that and look and make sure you have my review and everything was fine. Some of you have to clean up some things a little bit, and make sure you clean those up, and we'll talk about those cleanups in our class on Wednesday. Again, the portfolio of $100,000. All right, thanks, everybody. We'll see you Wednesday evening. Adios.